Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning. Today will be the Tuesday, the 18th of November 2025. So as usual, before we kickstart our gist of the Daily Dose for today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. All right, just make sure that the screen is good. This presentation is not. This presentation is for general information purposes and it's not investment advice. Past information is not representative of future results. All right. So as usual, before we jump straight into the chart of the day for today's daily dose, there'll be two of them I'll be sharing. Let's have a quick recap what has taken shape in terms of the relevant news flow, i.e. if there's any economic data releases that has a significant impact on the intraday movement of those broad-based cross-asset classes that we cover on a frequent basis, ranging from the FX market, the performance of the major stock indices, and as well as the commodities markets, which is gold, XAU/USD, and the West Texas crude oil. So let's start with the performance of the US stock market first yesterday. So what we could see over here is that the performance of the US stock market continues to be rather lackluster ahead of this key risk event that's going to take shape on Wednesday after the close of the US session, which is the release of the AI juggernaut Nvidia Q3 earnings. So what I could see is that at the start of the first half, I would say that throughout the US session, we start to see intraday sell-off. It's only at the 4 a.m. mark where the market starts to recover at the said support level that we highlighted early on. So later I'll touch on more of the charts. All right. So what causes this lackluster movement or lackluster intraday movement in the US stock market was due to the fact that this prominent venture capitalist, Peter Thiel over here. So PT is one of the very VC that invests early in, we call it hyperscalers or growth company ahead of their stellar boom. So based on this, his VC fund, the 13F filing, his fund actually sold off the entire Nvidia stake last quarter. So that created a bit of negative feedback loop into the AI driven, we call it a rally that has taken shape, that has formed the, what you call it, the bulk of the return of the S&P annual gain since 3 years ago. So do not forget, last week we also have another prominent VC, which is SoftBank, the Japanese SoftBank, also reduced its stake in Nvidia. So that actually lead on to a kind of a negative feedback loop, where in the past 4 weeks, there's been market chatter talk about this AI bubble that is unsustainable over here. So what you could see is that if you look at the heat map of the S&P 500 yesterday, we see a slew of red across the board in the semiconductor industry within the technology sector, all right, which Nvidia leading the fall with a negative 1.88%. Later I'll share the chart of the Nvidia. Yes, on the surface it may look very negative, but if you dive deeper into the technical chart, the sell-off in the last 3 to 4 sessions has been pretty much controlled. Later I'll explain to you guys why. So in meanwhile, just sit back first and we call it as I continue to shape this summary of what has taken shape yesterday. And within a sea of red, we start to see a star, which is Alphabet, which is up by a 3.1%, a stunning outperformer among a sea of red yesterday among the AI related mega cap stocks. Why Alphabet actually managed to shoot up yesterday is because of a very interestingly, a traditional guy, value investing play guy called Warren Buffett investment holding company actually invested in Alphabet over here. So let me highlight where's the news flow for you guys to take a look. Where is it? Okay, I think it was not open here. Okay, give me a second. Let me pull up the news flow for you guys to have a look of it. Okay, give me a second. I think it was not. Yeah, this is the one. All right. So Alphabet shares jump after Berkshire, which is Warren Buffett investment holding company, makes a rare tech bet with 4.9 billion stake, which is pretty much significant. So what you could see over here is that market uh, has been in a jittery mode. Yes, on some side there has been what I call a debate pertaining to this AI bubble is a bust. But how about what the grandfather of value investing started to invest in Alphabet, which is also part of this hyperscaler in building up a database to drive this AI boom. So that actually kind of negated yesterday's sell-off in Nvidia over here, and also because the ongoing weakness in the US stock market is also driven by macro factor liquidity. So with the uncertainty right now about that third rate cut on the upcoming December FOMC meeting, we start to see two US Federal Reserve officials yesterday giving rather mixed public speeches. So what we could see over here is that, let me share with you, Fed Jefferson. So yes, Fed Jefferson mentioned yesterday that weaker labor market shift balance of risk, but he do highlight saying that policymakers needs to proceed slowly in terms of interest rate cuts as interest rates has approached neutral level. So that is more of a less dovish speech by Federal Reserve Vice Chair Philip Jefferson. And on the other hand, Fed Waller backs another cut in December at job as if his own personal view that job markets nears a stall speed. That means a lackluster US labor market. And we know that Fed Waller has been one of the more dovish voices within the FOMC voting committee members over here. But nevertheless, market participants in the Fed funds futures market continues to dial back on that interest rate cut in December, which is the potential third cut of this year. So current Fed funds rate is at 3.75% to 4%. And right now, the Fed funds futures traders only price in 43% chance that the Fed will do another cut in December. That has been greatly reduced since 2 weeks ago, where it's hovering around 60% to 70%. So with this lack of liquid with this we call it lackluster macro driver, that means it's a liquidity lack of a reduction in potential liquidity in the financial system due to a less dovish Fed. So that also created a negative feedback loop into the US stock market, where we start to see all four major stock indices closed in the red yesterday. The SPX down by negative 0.9%, the Nasdaq down by 0.8%, the Dow Jones down by 1.2%, and the worst hit was the Russell 2000 down 1.96%, which is almost down by negative 2%, due to the fact that the Russell 2000 small cap company are much more highly leveraged in terms of their balance sheets, hence pretty much dependent on a lower interest rate environment to drive profitability growth over here. So what's interesting over here is that now let me share with you the updated levels to watch for the three major US stock indices that we cover on a frequent basis. So let us start with the US Wall Street 30 first, which is representing of the Dow Jones Industrial Average. So what I could see is that the US Wall Street 30 plummeted, but managed to flirt around the 50-day moving average, which is also our medium-term pivotal support zone over here at 4,745. 4,740, 46,740, 46,575 level. All right, over here. So what we could see over here is that first resistance level now got to actually put away that negate yesterday's bearishness will be at 47,020. Okay, let me put it in writing over here. 47,020. All right, to actually remove yesterday's bearishness before exposing the next intermediate resistance level to watch at 47,330. And what's interesting over here is that we see a lower low at the medium-term pivotal support, but however, the hourly RSI has shaped a higher low, indicating a bullish divergence condition that has been fleshed out on the US Wall Street 30. Now, very quickly on the S&P 500. So the S&P 500 also hit the medium-term pivotal support zone at 6,660, 6,645, where it managed to stage a bounce over here, and it starts to shape a lower low as well. But however, the RSI has started to shape a bullish divergence over here. So in order to negate yesterday's bearishness for today, the S&P 500 got to immediately break above this intermediate resistance level at 6,720. All right, over here. Okay, 6,720 in order for it to take us up higher to 6,750, followed by 6,780, which was at yesterday's Asia session high. All right, now quickly will be the Nasdaq 100 over here. So the Nasdaq 100 also drifted downwards and managed to stall at the medium-term pivotal support level at 24,635 yesterday before shaping a bounce in the last hour of the US session. So intermediate resistance level to watch to negate the bearishness that is being invoked yesterday will be at 24,940. All right, 24,940 over here. Okay, before taking up higher towards 25,130. All right, 25,130. So these are the two key resistance level to watch out for on the Nasdaq 100 for today. All right, so if you're able to surpass these two key resistance level, potentially we may start to see further potential push up to retest the 20-day moving average at 25,430. So the key support level remains at 24,635 on the Nasdaq 100. And what's interesting, since we are talking about Nvidia, Nvidia, we call it induced weakness that is being induced on the overall lackluster sentiment in the US stock market yesterday. Let's have a quick look at the chart of Nvidia, which I want to share with you guys, because on the news flow surface, yes, we see a lot of negative news flow, but price action on Nvidia doesn't seem to be so negative at all over here. Come on, what is this? Right, so let's take a look at the chart of Nvidia first. Okay, this is the daily chart of Nvidia. Technical perspective, it continues to bounce off the 50-day moving average, and yesterday it managed to shape a bullish harami pattern as well. All right, over here, taking into account of this small little spinning top and this longer candlestick body that has been formed on last Friday, and yesterday price action bounced off exactly at the 50-day moving average, and as well as this medium-term ascending channel that has been in place since the low of 5th of September. So definitely there's some form of we call it support that's being formed at this key inflection zone, which is my medium-term pivotal support zone at 183.30, 183.30, 177.70. And if you look at the relative strength chart of Nvidia versus the S&P 500 over here, it also remains supported above the 50-day moving average as well. So indicating that there is no clear underperformance of Nvidia versus S&P 500. And taking into account of Nvidia within its information technology sector, because Nvidia belongs to the information technology sector. Also, the relative strength chart or the ratio chart of Nvidia versus information technology sector continues to hold above this 50-day moving average as well. Also indicating no clear signs of underperformance of Nvidia within the information technology sector. And what's interesting over here is that this particular indicator at the bottom is actually the chunking money flow indicator. Is actually a derivative of price action with volume. So take it away that is like a modified RSI, but taking into account of volume which is transacted. So that's why it's being called a money flow indicator. So by looking at this money flow indicator, it has managed to actually inch up above the 100 level mark over here by shaping a higher high, you could see. All right, so where it bounces from a 15-month low. All right, close to a 15-month low previously that was in August 2024. All right, so the way it bounced off 15-month low, indicating that there is money flow going into the stock of Nvidia, despite those negative news flow that I share with you guys. So overall, what we could see is that, yes, on the surface, we may see a lot of negative news flow surrounding Nvidia, but from the price action, and i.e. the technical chart of Nvidia is not so bearish, and in fact it's being price action is being supported with positive technical element at this key medium-term pivotal support at 183.30/177.70. So hence, I do not have a very strong conviction that there could be a significant sell-off on the Nasdaq 100 and the S&P 500 or the US stock market at this juncture by looking at the highly significant price movement of Nvidia that could have a significant feedback loop into the overall US stock market. All right, so that's for the US stock market as per se. So now going forward into the FX market over here. So if you look at the FX market, we see a 5-day rolling performance of the US dollar against the major currency as of 18th of November. They continues to remains in a sideways ranging formation over here. All right, as continue to be a sideways ranging formation. So if we were to look at the 1-day rolling performance, all right, over here we start to see a sell off in the dollar against the Aussie and against the Kiwi, given the fact that the Aussie and the Kiwi was rather weak yesterday during the US session, because also in relation with the proxy with the risk off in the US stock market, given the fact that the Aussie dollar tends to see a significant intraday weakness once we see in line with weakness in the US stock market, was they tend to be a risk off barometer as well for the Aussie dollar. But what's interesting over here is that the dollar versus the Aussie has starts to see an intraday push down. That means, i.e., the Aussie weakness has starts to get negated due to the fact of this RBA minutes that was released earlier on at 8:30 a.m. Singapore time. So RBA during the minutes mentioned that rates could stay on hold longer. So given the fact that that means RBA is likely coming to RBA, which is the Australia Central Bank, is coming to potentially the tail end or even ended its current interest rate cut cycle. So the minutes tilted slightly hawkish at the margin, with firmer demand and stronger jobs reducing near-term easing odds over here. So that causes the Aussie to bounce against the US dollar in today's Asia session. And once you just say very quickly, let's look at the updated chart of the Aussie dollar over here. All right, very quickly, let's go to the Aussie dollar. So yesterday, the Aussie dollar broke below our neutrality limit. All right, our neutrality limit at this 60.6505 over here, and right now it's trying to actually stabilize at this point in time. There's a slight bounce over here upon the release of the minutes. All right, so right now the key support level to watch out for today will be at this 64.67. So this will be my kind of a short-term pivotal support on the Aussie dollar, given the fact that it's now coming back to this short-term key range support level. Okay, that has been in place since the low of 5th of November, which is the start of this month at 64.67, and so confluence very closely with the rise, the 200-day moving average as well. So first resistance it got to actually surpass in order for the bulls to gain traction on the intraday will be at 65.05. So a break above 65.05 potentially could seek out 65.25/65.40 over here. All right, this zone over here at this point in time. All right, so that's for the levels to watch for the Aussie dollar. All right, so yeah, these are the key news flow that has taken shape yesterday and as well as in today's early session. All right, so right now the second portion of today's daily dose will be my chart of the day. So I'll be sharing two chart of the day. All right, so before that, let me expand my screen so that you guys could have a better view of the charts. Okay, over here. So my first chart of the day will be more pertaining to the FX market, will be the euro dollar over here. So still recall yesterday, euro dollar, we do have a slight bearish bias looking for this retracement of that previous rally that's being seen on 5th of November to 14th of November. And the retracement indeed take shape and hit our first support level yesterday at 115.80. And if we will do the Fibo retracement of that previous rally, that is actually the 38.2% Fibonacci ratio with the 50% at 115.60 and the golden ratio very close to 115.30. So very interestingly, also the RSI managed to find support at a parallel ascending trend line, which I drew from the low of 31st of October all the way up to yesterday's bounce off during the start of the US session. So with that, potentially there could be some form of downside momentum has starts to ease off after yesterday's retracement. So given that this downside momentum has starts to ease off, indicating by the hourly RSI bouncing off from a parallel ascending trendline support, I'll be less convinced to be bearish anymore on the euro dollar. So in fact, I will use any potential fall as my any potential weakness right now for a potential minor bullish reversal on the euro dollar that may form due to the current technical elements that I share with you guys. So 115.80/115.60 will be the intermediate support zone over here, and I will use 115.30 as my short-term pivotal support level for today to flip to a minor bullish reversal bias on the euro dollar for today. And given that 115.30 is also confluence with the golden ratio of 61.8 which I shared with you guys earlier on. So as long as price action didn't surpass below 115.30, I do have a potential minor bullish reversal scenario that may unfold on the euro dollar with two key resistance level to watch out for will be 116.15. A breakout above 116.15 will potentially seek out a retest on last Friday swing high area, which also correspond with the 50-day moving average in first step at 116.50/116.60. Only a bearish breakdown below 115.30 will potentially see a further dip to seek out the lows of 4th of November and 5th of November at 114.95, 114.75 next. All right, so that's for the euro dollar. The next one I'll share with you guys will be the commodities market, which is gold XAU/USD. So gold XAU/USD will also be my one of my chart of the day over here. So very clearly, yesterday we do have a bearish bias, indicating that whatever bounce, the 9% rally from the low. Give me 1 second. Where is to highlight to you guys? Come on, where is it? Where's this chart? Yeah, this is the price range. So that rebound of 28th of October all the way up to the 13th of November high, which is close to about 9% rally. So this likely a dead cat bounce, which indeed it happened, where price action could break below the first downside, the first intermediate support level, which my downside trigger level at 4,062, 4,036 over here. So this will be my first resistance level to watch, given this has really broken down on the downside over here. And I would tighten my pivotal support level for today, tighten my pivotal resistance level on using US last Friday US session high at 4,110. All right, so let me do some adjustment. 4,110 ST pivot. Okay, so this will be my normal resistance level. So doing a bit of risk management. Okay, so right now, very clearly, technical elements has starts to deteriorate as expected in the short term for gold XAU/USD, breaking down our first intermediate support level at the 4,060, 4,036 level. That's a downside trigger level, exposing further weakness. So with that, I would adjust my short-term pivotal resistance level down to 4,110 for today, maintain that intraday bearish bias on gold XAU/USD for the next intermediate support level to come in at 3,980. A breakdown below 3,980 may expose further weakness in first step to 3,895, 3,864. Only a bullish breakout above 4,110 will negate today's bearish bias to see a retest at 4,155. Only a clearance above 4,155 will see a much more substantial intraday recovery towards 4,203 next. All right, so another chart of the day will be gold, still maintaining that bearish bias, being reinforced by the breakdown of the 4,060, 4,036 support level yesterday. All right, so that's sum up the second segment of the daily dose. So now let us move on to the third segment of daily dose, where I share with you guys what are the key economic events slash economic data to look out for today. All right, so for today will be Tuesday over here. So heading into the start of the European session will be rather quiet, no key European data to take note of, both in UK and Eurozone, as expect the fact that we have a slew of ECB officials speaking publicly, starting at 4:30 p.m. ECB Machado, then 4:40 p.m. ECB Tillminen, and 6 p.m. ECB Budge and ECB Anderson will be speaking. Potentially, their speech could shape some intraday movement on the euro dollar and the euro crosses. And given the fact that right now, the US government has just reopened, so the official data, but those are already in the past, has now continues to seep out in the public. Starting on Thursday, we have the September non-farm payroll data and employment data, but those are already in the past. So market may start to focus on still privately compiled US data. So ADP couple of weeks ago started ADP employment change weekly data. So that is a kind of a something very similar to a weekly labor market data, but compiled by private organization ADP. So market may choose to focus on this number. Previously, it was actually has a negative 11.25K decline. So that data will be out at 9:15 p.m. Singapore time today. So that could also potentially influence the FX market and the major US stock indices intraday movement. So that will be at 9:15 p.m. Singapore time. And thereafter at 11:30 p.m. Singapore time, we have Fed Bow speech over here. All right. So before we go, there's one more data, one more news flow I forgot to share with you guys is out here. Where is it? Yeah. Okay. So later on, Bank of Japan Governor Ueda will meet with the new Prime Minister Takaichi today. So the meeting is set at 3:30 p.m. local time. So local time will be Japanese time. So that so that will be at 4:30 p.m. Singapore time. So this is a routine meeting, but the backdrop is pretty significant. So right now, market participants will be giving up their ears and eyes on the exposed meeting between Ueda and Prime Minister Takaichi today. If there's potentially there could be a media report or what is their meeting about. But given the fact that why the backdrop is important, because previously in the last few days, Prime Minister Takaichi has kind of give indirect guidance asking Bank of Japan to be much more accommodative in their monetary policy, given the fact that the Bank of Japan is no longer embarking on a interest rate cut cycle, but instead of a gradual interest rate hike cycle. But what's interesting over here is that before we go, let's have a quick look at the chart of the dollar yen over here, given of this important news flow. Okay, very quickly, dollar yen. All right, so if you look at the dollar yen, all right, so dollar yen yesterday we were bullish, and it hit our resistance level at 155.30 over here. So this is the upper limit of this bearish ascending wedge that has been forming since the low of 29th of October. And what's interesting over here is that it has started to stall at this 155.30 short-term pivotal resistance level, which I have for today, which is the upper limit of this wedge. And what we could see over here is that the RSI has also shaped a bearish divergence as well. All right, right ahead of this key important event that will take shape at 4:30 p.m. Singapore time. This is 3:30 p.m. Japanese time, between the meetup with Bank of Japan Governor Ueda and Japanese Prime Minister Takaichi today. So potentially what we could see over here is that given this rather weak technical elements for the dollar yen on intraday basis, it could potentially do a slide down if 155.30 short-term pivotal resistance is not surpassed to the upside for the dollar yen, with first support coming in at 154.75 over here, 154.75. Okay, so a breakdown below 154.75 may expose further weakness towards 154.30, which this is a very key intermediate support level, given the fact that it's the lower limit of this ascending wedge configuration, where previously we managed to see significant support or significant bounce on 14th of November, 7th of November, and 29th October this year. All right, so these are the two key support level to watch, with the key inflection short-term pivotal resistance at 155.30 for the dollar yen, given the fact that at 4:30 p.m. Singapore time, we have this important meet-up between Bank of Japan governor and the Japanese Prime Minister. All right, so with that, that sum up today's daily dose of market insights. Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.